Okay, my name is Gulam Ghani. I think most of you all know me. I'm the academic leader in the tax section. A very good morning to our esteemed panel, Dean of the School of Accounting, Economics and Finance, Professor Sibanda, Coordinator of our accounting programs, Dr. Suren Pillay, fellow lecturers, students. I welcome you and I thank you sincerely for your attendance at this event. The theme of our discussion today is Budget 2017 and what can be expected in our future budgets. Our program is as follows. Professor Sibanda will address us with an opening address. We will then have our panel discussion, which will be led by Mr. Yoshin Chetty. And then we'll have time for some questions, and then we'll close. So, Professor Sibanda, can I call upon you to do your opening address?
The Program Director, Deloitte Representative, Morar Incorporated Representative, Paying Tax Representative, academics, professional services staff, students, ladies and gentlemen, good morning.
Morning.
Good morning.
Morning.
I know the weather is not that good. Firstly, I would like to assure the panelists, who are also employers, that attendance does not represent or does not reflect poor attendance at work on Fridays. Our postgraduate students had their test week, and the weather has done us no good either. We are delighted to have you here to participate and share in this tax discussion forum hosted by the School of Accounting, Economics and Finance, in partnership, of course, with the leading accounting firms in Durban and South Africa. Thank you for coming. Your participation in this event serves to remind us all just how important partnerships between the academia and the industry is. To our panelists, your presence is a true testament to your commitment in this partnership. Thank you for coming. This discussion forum is one of the 3 series that we have organized in the accounting discipline in 2017. We had the auditing discussion forum in March, and it was a resounding success. And we have scheduled a financial accounting discussion forum for July, August this year in Westville, Durban. This is our first discussion forum in PMB, and we hope to have more discussion forums on this campus in future. It is our desire to have these events on an annual basis. Program Director, ladies and gentlemen, this is not just a talk show. This event is a realization of our commitment as a university to develop and nurture sustainable partnerships with the accounting profession. I strongly believe in relevant curricula and hence relevant graduates. As a university, time has come for us to move away from being knowledge factories that just regurgitate textbook theories and produce irrelevant and unemployable graduates. We need to be responsive and proactive to the industry needs. This discussion forum, therefore, seeks to bring about new dynamics in teaching and learning in response to the dynamic student, industry, and society needs in general. If I may pose a question, Program Director, how do we respond to these dynamic changes as a university? My response to this would be Hosting such events as this tax discussion forum is one of the strategies in which we respond to this dynamic and ever-changing environment. This year, our theme is Tax Budget 2017 and beyond. This is a topical issue within the taxation fraternity and nationally. The dynamic composition of our panelists is meant to bring that different perspective to the tax discourse. To the panelists, once again, we really value your commitment to improving the caliber of our students. To the students, remember, as I always say, you can't change the direction of the wind, but you can adjust your sails to always reach your destination. Please adjust your mindset, focus on your studies, and you will achieve your dream of becoming a chartered accountant one day. Ladies and gentlemen, welcome to this discussion forum, and I wish you fruitful deliberations. I thank you.
Thank you, Professor Sibanda. As Professor Sibanda has alluded, the theme for the budget, for the discussion today is Budget 2007 and beyond, and the options available to government in order to finance expenditure is either tax the rich or accumulate more public debt. So this is the options that they have. So when governments consider increasing tax rates to fund expenditure and new policy decisions, for example, we have the new National Health Insurance Scheme that is currently being examined in order to introduce in South Africa. And this decision is often a difficult one because of the budget requirements. Also, in terms of getting in extra taxes, one has to consider factors such as equity, efficiency, flexibility, ease of collection, and potential revenue that can be raised. These are the factors that they would take into account before coming up with policy. In terms of the current budget and going forward, the most significant number in the current budgeted fiscal year was probably the increase in expenditure from 1.5 trillion, I'm not sure how many zeros that is, from 1.45 trillion. This is almost a 7.5% increase from the prior year. Of course, in future years, the expenditure will increase exponentially to fund government plans and to redress the imbalances of the past. Of course, accumulation of public debt is not ideal, and especially now it's even more relevant because South Africa has reached what they call junk status. So the cost of borrowing is a lot greater. I now hand over to Mr. Chetty, and he has promised me that he will be interrogating the panel. Thank you.
Thanks, Kulam. Okay, so today really what we're discussing is based on what happened in the budget, right? And where does the government go from now? Go to now. So we have different options that the government might have. So we said they may tax them, may have personal tax, we may have VAT, estate duty. Earlier on, one of our panelists said we tax them until they die, and then even after death, we tax them then too. So if we had to ask the first question around personal income tax, we've seen in the budget that we increased the highest marginal rate, okay, from up to 45%, and we know that there aren't many people that are sitting in that bracket of earning more than 1.5 million. There are about 100,000. I think, Brian, you said about. Yeah, there's 111,000. Okay, so there's about 110 or 111,000. So there's very few people. But what do you feel what I'm just going to ask the question openly, and anyone who feels or has a feeling has a point on it can make it. But what do you feel this taxing of these people, these higher income earners? Do you feel that that's the right thing to do in order to subsidize the people on the lower end of the scale?
So if I can just, go first, I think when we, if you ask the question about whether this rate is a high rate to start off with, and if you had to look at the rate in isolation, I think it would, be difficult to answer that question, because one has to step back, I think, and look at what value or benefit are you getting in return for the 45%. So if you had to look at other countries, for instance, there are higher tax rates. Just as an example, there's Sweden, and you've got a tax rate of 57%. But if you look at the value or the benefit that the taxpayer gets in return for that, that's better infrastructure, better service delivery, better healthcare.
Okay, you
So,
mean in that way, okay.
So from that perspective, from a South African perspective, are we going to feel the same way? Are we getting the same in return for the 45%? Whether it's directly or indirectly, because you can have a direct benefit out of it, or you could see the benefit being passed on to others through your tax contribution. So if we had to answer that question, yes, it is high in relation to the other countries because of what we get in return. But just to add one more point about just a little bit of research that I did with Sweden, for instance, taxes are being used to fund scholarships. So, that again proves what benefit you're getting in return for the tax that you're paying.
Okay, I never really thought of tax as almost like buying a commodity. For us, I think in South Africa, we just view tax as an endless pit, and you just keep on putting money in there. It just goes somewhere, and we don't know where.
I think just to add on to that, I think firstly, what we need to understand is that before we look at the tax aspect of the budget, we have to acknowledge that we've been through some tough times, and this has been worldwide. And because of the tough times, there's been slow economic growth, and not just only in South Africa. Slow economic growth basically increases unemployment, because it's the employment sector where we generate majority of our taxes. And I agree totally that yes, you're going to have a situation where professionals are going to be paying this high tax rate, but are not getting the service that they are paying. And that is something that obviously government needs to look at, as well as government looking at the amount of expenditure that they are requiring to be funded. But something in the budget which people probably never notice as well is that everybody focused on the 45% increase, but the relief for middle and low income earners, that bracket was actually below inflation rate. So in all honesty, yes, we increased the rate at the top, but everybody as a whole actually is also contributing a significant amount of revenue. So, and also we need to take into account, we're not a first world country, we're a third world country, and maybe we should be looking at the rates in third world countries and comparing that to where we are. And yes, if we're going to pay so much of tax, we need that service delivery. Otherwise, there's going to be a possibility of a situation where professionals are basically going to leave and we're going to lose skills. But on the flip side as well, progressive taxation. The more you earn, rightfully, the more tax you should pay. I think it's fair, and it's nice to have an audience like this, because that's where you come in, because those guys who are earning quite a lot need to speak to you of how to structure their taxes. And that's why taxes become so important. So you look at it from both sides of the perspective.
Brian, you were saying?
No, I think it's an interesting. It's quite interesting sitting up here, because I probably was a ADD or ADHD type of student, so my mind wanders when I when I'm in a forum like this. So I was trying to work out when I was sitting in your position as the graduating class of doing the honors year or CTA, and that was in 1988. So it was.
I wasn't born.
It was a couple of years ago, and once I graduated, you're now faced with 4 choices. You can either become a financial accountant, too difficult, auditor, possibly too boring, where's Trisha? Management accounting, once again, I didn't know what was going on, and it left tax, and it was this tiny little book that didn't seem to be too, it had 112 sections in it, and they weren't that complicated, and you could do it on a weekend and still pass the exam. And I thought, this is a career for me. And the problem is, tax has evolved over time, and it's got more and more complicated, and it's now really is complicated, and we've got many, many more different types of taxes that are hitting us. And I think going forward, what's happening is people are trying to find more and more avenues to actually generate income, so there's more and more taxes that are coming out. So hence I'm grey. I never intended to be grey, but things got too complicated. But if I go back to 1988, if you looked at the tax rates back there, they were higher than they are now. So I don't think it's a tax rate.
Higher than they are now.
They were higher than they are now. So what we didn't take into account in 1994, when the economy was actually performing really well, the tax rate steadily went down. There's a correlation between the state of the economy and your tax rates. So at the moment, I think the point was well made. We are in a really down or a depressed economy. Money has to come from somewhere, and there's always the easiest option is to increase the tax rates up, but they do hit a ceiling. And my personal belief is that you hit the ceiling at around about 45%. I think if we start pushing higher than 45%, people start to balk at the tax rates, and morality becomes a problem. People stop paying what they should be paying in taxes, and they start actually setting their own rates. So my thoughts on this is that it was this year's budget was, I don't think people were too surprised when the rate went up to 45%. It was expected. I think if they put it any further, it's going to become more problematic. But I think at the moment, there was an element of acceptance that the people who are earning more than 1.5 million rand, hell, they can afford to pay a little bit more tax. The need is there. But I do think the point was also very well founded that if you couple that with a perception of corruption, those people who accept to pay 45% tax and the money has not been perceived to be doing any good, that's when people stop paying taxes. So I think it's very complex.
So are we saying that in the future if the government had to increase above 45%, then when you said morality, are we talking about tax evasion there, or?
I think it's twofold. One thing, you are going to get people. I remember chatting to a forensic partner once, and he said, look, people are divided into 3 different categories. There's 10% who will never ever cheat. There's 80%, if the opportunity presents, they will cheat. And there's 10% who doesn't matter if they know they're going to get caught, they will cheat. That's how we work. The problem is that what worries me is that at the moment, most people sitting in the 80% start
feeling the pressure. Yeah,
they start. The likelihood of them actually starting to cheat will become more and more pronounced as they feel that it's more and more unfair. So,
I think to add to that, nobody likes to pay tax.
yes,
We know
that.
But what we need to understand is that the collection of tax, it's fundamental to the running of any society. And the correct amount of taxes adds to the economy, and coming back to, even though the individual tax rate has increased significantly, remember, we need to look at things in a broader scheme of things and not just individually. If they increase the corporate rate, it could have affected investment in our country as well. So whenever you're looking at all of these increases, we need to look at the global perspective as well. We also don't want to deter people from investing into our country, and by increasing the corporate rate, it's probably going to give that message out there. In fact, we should be looking at ways of bringing more investment in the country by having more tax breaks, and that will be more from your corporate side. In terms of your individual side, as I said, yes, you've got that increase, but because the lower and medium income earners brackets was also below inflation, that is where you're also generating revenue. And maybe the focus and target for more revenue should be on certain businesses that deal directly maybe with cash. So for argument's sake, you have lecturers.
We don't deal with cash.
I'm just saying. And tutors, catering businesses. There's an informal business world out there, and maybe that's, well, not maybe, but that's where they should be targeting to get this extra revenue.
The other thing from a point of view that if I go and summarize the commentary from my client base, generally the thought is we don't have a tax collection problem. If you look at what SARS collected in taxes, it's well over R1 trillion. If I look at it, and I in business, try and collect debtors in this economy, it's incredibly difficult. For SARS to collect R1 trillion is a great effort. I think they have to be commended for it. It's every year, every budget, I think the budget is ridiculous, and they actually do it. So I don't think there's a problem with the amount that's collected. I think the problem is that they, and the perception in the economy is the squandering of the money. If we're collecting the right amount, why isn't it going into the right areas of expenditure? And I think that's, I think we can look at tax. My honest feeling in tax is if we had a tax moratorium and said, look, let's continue where we are, that would probably, to me, be the right way to do it, and let's concentrate heavily, not on collecting more, let's concentrate on spending better.
Wisely.
And that would probably address the issue far better than trying to actually find other avenues of taxing people. Because it's if there was transparency as to how it's spent, I think there would be a lot more happiness with people paying.
Thanks. Brian, while you were talking, I just realized we didn't introduce the panelists, which is my fault. Everyone knows me, and I think we'll just go down and let the panelists introduce themselves. So Brian, do you want to start, maybe?
Right. I'm Brian Payne. As I said, I was here in 1988. I also did an HDIP tax here, so a couple of years later. For your sins, at one stage, I was the external examiner of the honours program, so you have to treat me nicely, but I'm not at the moment. I worked at PwC, KPMG, and Ernst & Young before going on my own, mainly because Deloitte wouldn't employ me. And my specialty is tax, which I've been a tax specialist from 1992. So I've been doing tax for a long time.
And you and Gulam were on...
I'm currently the chairman of the Eastern Region of SAICA's Tax Committee, and Gulam was always my right-hand man, so he was there for years.
Okay.
Well, I haven't been doing tax from 1992. And actually, I worked with Gulam's son, so you can clearly see there's a huge age difference. But my name's Ahmed Hussain. I'm the Senior Tax Manager at Mora Incorporated. I've been in tax now for about 12 years, which is giving away my age. Formerly from PwC as well. Thank you. Yeah, I think the biggest thing, which to me, I've realized over the years, is that tax, no matter what form, is still new to a large majority of people. And even when the guys are studying, tax is one of the least favorite of parts, I think, when it comes to studies. But I think the big thing about tax is, yeah, it's your favorite. Well, yeah, it should be. It should be, because tax, to me, is always, if you like challenges, if you want to use your mind, because there's so many variables. Like now, we had one question and we had whole bunch of different views, and that's what tax brings. You have the foundation, but there's so many variables that you could basically use that to come to a reasonable answer. So yeah, I've been in tax for those many years, and the environment has changed. SARS has become much more stricter, no matter what they say. They've got more rights, and it's not just tax anymore of completing a tax return, but you need to start bringing things as the legal element as well, looking at taxpayers' rights, looking at SARS's rights. So it's very interesting, and I hope you guys delve more into it in your studies, and it'd be nice to see more tax consultants. Let's be honest, it's not the, you're not at the top of the food chain when it comes to financial remuneration. but listen, there's so much to it, and I encourage the guys to carry on from there.
I'm Denisha Mullion. I'm from the Durban office. You can hear me all clearly? I'm not sure if this is on.
I
The
think
mic?
maybe the mic is in the wrong direction.
No, it is in the right direction.
Okay.
I'm from Deloitte, Durban office, senior tax manager. I specialize in VAT. Been in tax for over 10 years. I'm not going to give my age away, but I did have a short stint at SARS for just over 3 years in legal and policy. I totally agree. Tax is very interesting. You learn every day. So I can hardly call myself a tax specialist because I'm learning every day. But another reason why it's so interesting is because it has a direct impact on your life. So, you know, there's so many different taxes, but you'll find in each stage of your life, you're probably going to have an experience with the tax and identify with it. So it doesn't only mean that you're going to be consulting and advising other people, but it also impacts your life. So it's a good thing knowledge to have behind you.
Okay. Thanks. Okay, now that we introduced everyone, let's move on to the second question, or the third one. I think that the second one we've sort of answered, where we said, how does it compare to other countries? And it seems like we're slightly under what some of the more developed countries are, but we're on par, or even a little bit above par, developing countries.
So, if I can just answer that one.
Sure.
The average tax rate in Africa is sitting at 33%. 33% individuals. The European is 37%. And the global average is 33%. So if we look at South Africa, 45% does, appear to be high in comparison to that. So I think although, the rate, for instance, in certain European countries is as high as 57%, but you're looking at global average and African average, we're still higher.
Okay. Yeah, that's interesting. So if we had to look at Africa, and even though we've got big economies like Nigeria and Angola, we're still a little bit higher, but is that not reflective of the fact that we've got really rich people in South Africa, or do we have rich? I don't know.
I think that's. I was going to make the comment. The figure that shocks me is if you look at the demographics of the tax base in South Africa, there was just above 110,000 people in South Africa declaring more than 1.5 million rands worth of taxable income. Now, that's a couple of soccer stadiums full of people. That's the only people that are affected by this 45% increase. So I think what we're looking at is the vast majority of people in South Africa are not at that 45% bracket, and it's really just a very niche market of people earning above that bracket. If you break it down further, I think there were 3 people who earned more than $1 billion in that bracket. So it's a very unique grouping of people. Now, there's part of me when I look at it and say 45% and you're earning a good number of million rand, my sympathy for them paying the taxes starts to diminish. And I think that's for me. If I was somebody who was earning 5,000 Rand a month, I wouldn't have too much sympathy about a person paying 45% when they're earning that amount of money, especially in the economy that we work in at the moment.
But then aren't those people, if you just have to profile them, aren't they like the people that are professionals? And if we're taxing them very highly, isn't it going to scare them away? And then we actually lose tax as opposed to gain tax?
That's I think is the biggest threat. I think if you look at it, one of the political leaders the other day said, it doesn't matter what we can do, is we can let the country burn, it can go down into the ashes, and we can re-emerge thereafter. Unfortunately, it doesn't work. The reality is we need 110,000 people sitting, earning a lot of money. Just personally, because I deal with a couple of them, the problem is most of them have got an exit plan. At the moment, if you're willing to learn Portuguese, you're willing to buy a house in Portugal for around about 5 million Rand, and you go over there every year, you can buy yourself citizenship. The same in Seychelles, Malta, Mauritius. You can buy citizenship, and you can buy yourself, if you've got enough money, an exit plan. Now, this is not pie in the sky stuff. People are doing it. They've got plan B. If things go wrong, the money and them go out the country. Now, it serves no one's purpose to actually scare people away. And I think that's a whole. There is a threshold above which people are going to make that tipping point where people are going to say, we're no longer happy here. And that is the reality.
And I think, we should be asking ourselves, what is driving them to those other countries? Is it purely the tax rate? It can't be. So it has to be, it comes back to my earlier comment.
Or service.
If you are getting in return for, value in return for your money, it will influence your thinking about staying in South Africa. So I think that's where we have the gap, and that's where it needs to be addressed, to be able to keep those taxpayers in the country, because we need them.
Yeah, I think, just coming to your point, I think it's much cheaper to get citizenship in South Africa. Sure, I can buy an ID, it's much cheaper. But the biggest thing is, yes, in all honesty, let's sit back and say, is it really the tax rate that's going to scare everybody off? No. People are wanting to leave because of the economy, where they're seeing, is this country developing? Is there going to be something substantial? Is the value of what I have now still going to be worth that amount? If you look at inflation and if you look at the years to come, is there any proper plans in place where I can see this is taking it to the next level? My colleague and I were discussing this as we came here. We're looking at Pietermaritzburg. All of you guys are wanting to become professionals, but how many of you professionals want to stay in Pietermaritzburg after you get your degree?
None of them.
Is there anything that Pietermaritzburg can offer you compared to the bigger bright lights of Cape Town, Johannesburg? So it comes back down to that are we a sustainable country, not just for now, but for the future? And we need to be looking at ways to work towards that and sustain ourselves and be a leading country, and not just be a country that just follows. So if people, to me, don't use the excuse of high tax rates, we know you've got your exit plan in place because you're looking at other things. And what maybe SARS should be doing is putting stricter controls in terms of exchange controls, so we don't get the 5 billions and stuff being bought in Portugal and places like that. But we need to have a proper plan, I think, for sustaining and more development in this country.
So we need to basically be a more attractive buy as a country.
So let's use this high tax rate that we're collecting and use it to develop and instill opportunities for the future of our country, so that they can be here instead of the skills coming out of the country.
That's true. And so with this sort of increased personal tax rate, we find it has a knock-on effect on other taxes like CGT and those sorts of things. And we're just thinking, like, if you increase that tax rate, now it's going to affect the way in which people treat CGT. Is that like a valid concern, or because will you now sell less, or will you find different ways of selling it, or how does that work?
You know, one of the things, I look at a person who's trying to be an entrepreneur now in this current environment that we find ourselves. If you looked at the years before CGT, because that came out on the 1st of October 2001, there was no tax on capital profits. If there's a reason why half the tax law is deciding on whether receipt or accrual is revenue or capital, because if it was capital, no tax, nothing. Whatever you made was all yours. If you look at wealth accumulation, and you said, how do you accumulate wealth? In those days, people used to build up those businesses, sell them, find properties, sell them, and accumulate real wealth, because there was nothing coming off. And we have, the problem now is I look at your generation and you say, well, I'm going to do the same thing. You are severely hamstrung from a point of view of accumulating wealth, because you've got a lot more taxes to face, and you've got capital gains tax. And what was interesting, if you look at the growth of tax collections from capital gains tax, it's been quite subversive, because initially it didn't have much of an effect, because you only were taxed on the growth in your assets after the 1st of October 2001. So in 2002-03, it was never an issue. You look at selling a property or a business now, and work out the capital gains tax that you are paying. It takes the whole glean and pleasure of the sale. Suddenly, you sell your business, you get taxed in the company on 22 point whatever that percentage is. You then try and get it out, you get another 20% dividends tax, and your wealth has been eroded. So I think if you look at capital gains tax, I think the tax rate has had an effect, but much more than that, it's been the inflationary effect of over time, and the fact that there's now that effect that we had, or the benefit that we had of valuation date value, has been negated. It really is it's becoming an increasingly important tax.
That's interesting.
Yeah, and I think it goes again with times. You know, there's going to be more taxes brought in as we go about, whether it's capital gains tax, whether it's dividends tax. And one can't really say, you know, act now. We've seen recommendations targeting trusts, targeting estate duty planning, and just talking about capital gains, which has a direct impact to estate. It's something that you have to look at, and something probably you have to look at now, because you can see the trend of where it's heading, and making use of those exemptions and rollovers and reliefs that are out there. So, in all honesty, it's something that will increase as we go about, and I think it's just a worldwide trend in anything.
The only problem I've got with, if you look at every other capital gains tax regime, or most of them, they've got an inflationary indexing so that you take out the effect of inflation. It's the missing link in ours. We initially used to only tax 25%. That, where what has been fairly effective is that 25% went to 30%, it's now 40%. That's been increased every year, and that's having a far more profound effect on capital gains than the rate increases. So, and it's a very easy one to sneak through at budget time, because it doesn't have an emotive element to it, because it doesn't affect everyone, and it only affects you when you sell the property. So you sneak it through, and you only really feel it when you sell you sell an asset and you say, oh, hell, I'm now paying close to if you've got it in a trust, it's 32% of the gain in the trust, or plus these days. So it's a painful tax.
That's true. Okay, so let's now move on to another option that the government might have in the future, and that's VAT. So it's often been said about VAT that VAT is not a progressive tax, and no offense to our panelists, but because what it ends up taxing everyone, the poor and the rich, and it's also one of those taxes that is snuck in, so you don't know about it, but everyone pays it. We found that the worldwide average is around 16.5, and so South Africa is sitting at 14. Many were anticipating a tax increase in the budget, which didn't come. What would you say? Are we keeping that increase back, or should it be increased? I mean, 15 looks like a nice number. It's sort of round. Why are we sitting at 14?
So, being the VAT specialist, I'd like to answer that. But yes, 15 sounds like a great number if you, but when it starts to hit the pocket, I think from a personal point of view, you're definitely going to feel it over the long term. But if you look at it from an economic point of view, if you had to continue increasing personal income tax, it will have a negative consequence in the long term. So there'll be a consequence to the growth and the investment in the economy. So by increasing the VAT rate, it seems like a far more feasible option. However, you do have the greatly affected, and that is the poor community. So although it may not impact the rich or impact them marginally, it certainly will have a direct negative impact on the poor. So yes, it may achieve government's objective of increasing revenue, but I think at the same time, government should be putting in mechanisms to assist the poor, and then that would probably achieve the overall objective.
Do you think that sort of like how we have progressive personal tax, that a progressive VAT is possible? So maybe, but obviously it's an admin burden, but so if you're a poor person, you pay less VAT, or if you buy essentials, you pay, it's sort of existing now, but on a more aggressive scale. Is that possible, or is it workable at all?
So I think that, just talking about your basic needs of the poor, and, coming out of the Davis Tax Commission, what the report did, include was increasing, finding ways of assisting the poor, and one of the recommendations was increasing the zero-rated items on your basic food needs. That was actually, not recommended, in the sense that everybody benefits out of that. And that would not create that direct benefit to the poor. However, if you put in a social grant, that would then kind of assist the poor and not the rich. But I think that it being a system of a single rate, that was another recommendation, that that should be a single rate and not multiple rates, because you're not creating a complex system, you're creating a very simple VAT system. But yes, it can definitely achieve what we want.
Okay, that's interesting. And then, does VAT at all? Can we say it's like the Robin Hood of taxes, where it takes from the poor and gives to the rich, the opposite of Robin Hood? Because that's what people say about it. And is that true? Do you feel that's true?
I think if I look at VAT, because interestingly enough, when I studied in 1988, the best year to study, because VAT came out in 1989. So it wasn't part of
1991.
1991. So it wasn't out yet. So I didn't have VAT. So it was really good. And because VAT was coming out, in the old days we had GST, General Sales Tax, and they didn't teach it because VAT was coming out. So the best time to study, 1988. We only had half the stuff to study. But having said that, 1991, when it came out, I was finishing off articles, and I had to do national service in those days, and I wasn't going to go running around with a gun, so they sent me to SARS for a number of years. And at that stage, VAT came out, and the problem is it's a political, it does affect the poor. So the best thing about that time is that if you got your timing right, there was always a protest march against SARS. And if you came in at the right time, so you went out for tea, there was a protest in front of the building, you couldn't get back in, so you could go home. But it was problematic. Politically, it is highly charged, and I don't believe that in this current economic and political environment that we've got, it would be wise to actually put up the rates because it's just too highly charged. It does affect the poor. When I was preparing for this lecture, I thought, if I'm earning 5,000 Rand a month, and you put up you're spending 5,000 Rand a month on necessities, and you put up VAT, it has a direct bearing on my pocket. If I'm earning 50,000 Rand a month and they put up the VAT rate, there's no real effect on me. It's not. It's in the current environment in South Africa. It might be on paper and economically the best option to collect money, but it's morally not right.
Okay.
Coming to your point of the Robin Hood analogy, I think practically, or putting it in a life situation, VAT should be seen as a circle. You charge me VAT, you're allowed to claim it if you're a vendor, but I need to pay that VAT across over to SARS. So VAT is not really enriching anybody,
Except
because
SARS.
it's a circle. So it's not stealing from the poor and giving to the rich. It doesn't work that way, because ultimately you as a business person is also wanting to make a profit. So therefore your sales at the end of the month should exceed your expenses. So you should not be in a situation whereby you'll be getting VAT refunds. So again, in the term of it being a circle, it's SARS who basically benefits. There's talk from the Davis Committee and plus from the last budget that maybe they need to look at certain zero-rated supplies where it should be rated at 14%. So expect something to happen in that, but I don't think in terms of an actual number increase that will come. You know, like Brian mentioned, there is a lot of political issues behind this as well, and it would be unfair to increase something that's going to affect everybody across the board. We also need to understand that this is South Africa, and we need to look at the logistics, we need to look at our economy, we need to understand where we're coming from, and we need to look at where we're wanting to go.
I think I agree.
Sorry.
Sorry, if I can. I think, you know, I certainly agree with that view, but because VAT is consumption based, you know, the end user effectively bears that burden. So when we talk about increasing the VAT rate and comparing that to the increase in the personal income tax rate, you're actually broadening the tax base. So that burden is shared amongst far more South Africans than it is with your personal income tax, because there's only a certain number of South Africans that pay income tax. But with VAT, because the end user, I mean, it affects every single one of us. But unfortunately, the negative impact on the poor is definitely a reason why, you know, we wouldn't want it to be imposed.
Okay.
Or increased rather.
So even though, like you're saying, even though VAT is probably going to bring in more money a lot quicker, it shouldn't be increased because of the social sort of impact.
Unless there's a mechanism in place. But I certainly feel that it is coming, that increase is coming. Okay. It's probably, we're probably going to see that increase next year. I think a lot of us anticipated this year.
Why?
I think, we anticipated the increase to be happening in this last budget that happened, but it came as a surprise that it wasn't increased. So I just feel that the next source of revenue income, you know, to generate more revenue, can only be from the increase in the VAT rate.
I think if you look every year with the budgetary process, the downgrading to junk status will increase the cost of borrowing in South Africa. The social need is getting bigger, and we've only got a pot that big. So what happens is that if the size of debt repayment becomes larger, we can't start squeezing the social spend, because that's politically is suicide, and it's really morally not right. You can't have people starving, but we need the money. And the problem is we're running out of avenues to find this money. So if we've got a 14 billion Rand hole to fill, the easiest one is to pick up 1% increase in VAT, and that's 14 million Rand in that hole. It might not be the right way to do it, but I think it's the easiest way, and therefore it will happen. But I don't know if it's morally the right thing to do.
Wow, okay. And then we also heard some talk about NHI, so National Health Insurance, and it's been submitted by commentary that I read yesterday where that the VAT increase is being held back until NHI comes, so that the effect of NHI on people is reduced. Do you think there's any other thing that we could, or any other area that we could find money for NHI, or is VAT the only option? I'm sure there is something else that we can do, right? What do you say, Brian?
I was going to say, sell SAA. No, there's the real challenge we've got is there's major, the NHI as a spend is a major commitment. I look at developing countries and turn on Sky News and see what the politicians talk about. It's national health insurance. Turn on to CNN and see what they're debating at the moment. It's Trumpcare as opposed to Obamacare. There's hardly a country in the world that actually has got this thing right. And the biggest problem is the funding. People are getting older, and you can't commit to a money pit or a black hole of money to spend in respect to medical care. I think it's an area that is from a cash resource or requirement point of view is huge. So I think if you're looking at NHI, we have to look at every form of funding mechanism, that just being one of them.
Yeah, I think it's important also to understand tax should not be, and it's made up to be the only stream of revenue that we can generate in this country. And maybe we need to go one step back and start looking at expenditure and say, we need to cut back on governmental expenditure, because then we can get that surplus we can utilize in things like the National Health Insurance Fund, so that we don't have things like VAT increases. We need to look in terms of our exporting, in terms of the use of our seas. You know, like I said, you have to look at it holistically and not just kind of focus too much on one stream, which sadly we're doing at the moment. We should be cutting back and saying, you know, we've got all of these ministers, and what are they earning, or what are their benefits, and start cutting back there. It has to be something that goes across the board. That will affect everybody across the board, yes, but let's start looking at expenditure in-house first before we start looking at other measures.
And I think in addition to that, it's just about managing what we have currently more efficiently. So, you know, I think that is what the frustration is, and the conversation is about amongst many South Africans, is how are the funds being managed? And currently what we have, can it actually subsidize the things that we are looking to fund with in other ways? So
just one point that if you look at, there's a couple of slogans that get always thrown out when people talk about tax. They say, well, we have to broaden the tax base. What does that mean? Now, one of the ways worldwide that countries are looking at broadening the tax base is this whole concept of BEPS, which is base erosion and profit shifting, which in the old days went out with transfer pricing. You've got tax havens, and people are putting money in tax havens and they're escaping tax. Now, if you look at broadening your tax base, from that, BEPS is something that is going to be heard more and more and more. It's the whole concept. If you look at from a worldwide point of view, the concept of having a tax haven is becoming frowned upon. People are looking at it and saying, well, there's an element, it just doesn't feel right to put your money in a place which doesn't pay tax, and you're taking it out of South Africa, putting it into a country you're not paying tax. It's not fair. So mechanisms, and increasingly more and more difficult, more and more mechanisms are going to be put in place in order to take all that money and that has been currently out the tax system and bring it back into our tax system. At the moment, we've got a special voluntary disclosure program which is saying, come clean. And it's not cheap, but we can actually regularize your affairs. The threat that has been offered to the people is they're saying, look, from a worldwide point of view, there's computers. Everyone can talk to each other. There's going to be common reporting. If you've got your money in Guernsey and you haven't told the people in South Africa, they're going to come and nail you because they're going to tell you. They're going to have to tell on the fact that you've got the money. So if you look going forward, I always feel that there's a glimmer of hope from we can broaden our tax base by properly administering a system of controlling transfer pricing and the money that is sitting offshore. So I think that's a very interesting place to have a look at. If any of you decide that you want to do tax and you want to actually get into a specialized area and make heaps of money, that's the area to get into.
Shouldn't you take commission for that?
So that actually brings us to our next sort of tax, a group of taxes, is wealth tax. And the Davis Commission has sort of shone a light on it, and we will here too. But so estate duty and trusts is sort of a tax that was put forward as something where we can increase or find some more taxes. What are your opinions on that?
I think you started off the discussion by saying, bond-free tax, tax to death, and plus tax after death. I think a lot of people need to, coming back to the understanding of taxation, is that we need to understand that something like estate duty firstly exists. A lot of South Africans do not understand that. A lot of South Africans say it doesn't affect me because the abatement, I don't own anything, 3.5 million and all of that sorts. But tie it back up to what we were talking about, capital gain tax and inflation. You acquired that property in 2001 or 2000 for 100,000 rand. But the value of that property now has increased exponentially. So you may find yourself in a situation that your estate exceeds that current exemption, and your loved ones may they end up having to pay estate duty tax. So this is something that, yes, the David Committee has looked at, and we discussed it and looked at it. It's simply it's a deferment of your tax. Whether you've got that primary abatement of 15 million or not, the second spouse is going to have to pay. So I don't know whether it's a good thing to go first. Maybe, or basically just, if my spouse goes, then just marry again. Maybe that's an option people look at a later stage, but estate duty is basically just a deferment, because remember, as it passes on to the new spouse, the value of that asset has also increased. And we have these recommendations where, again, Davis Committee, yes, maybe looking at a select bunch of people, but if I look at inflation, that select bunch of people is no longer a select bunch, it's actually becoming quite a large amount of people. So it's something for discussion, and I know, again, they're just wanting to say they want to make sure that there's no, that the taxes on those wealths are done equally.
And I think we certainly welcome that significant increase from 3.5 million to 15 million, because at least that is aligning itself with the way the property or your assets are increasing. So it's definitely something that, that recommendation would definitely benefit a lot of people.
Yeah. The other tax that I've sort of been introduced very, very briefly to was sort of this capital transfer tax, which means at a given time, SARS sort of revalues everything that you own and then charges you a tax, which you then obviously, now it's in the middle of your life and you need to pay it. Is that not an option, maybe for the higher income earners? Or
I think in the Davis Commission, one of the reservations that they had is that it becomes so complicated to administer. So they actually said that they would discourage the use of a capital transfer tax. If they ever do, by the way, then all those people who like management accounts and finance, valuations,
now become very important.
They become very important people, because everything would have to be valued at specific periods in time. And I think that's where the problem comes in, is that what's the value of something? It can be 1 rand or 100 rand, depending on the number of variables. So it's a very very subjective number that you're trying to determine, and when you put a tax on that, it becomes a highly difficult area to police, because there is going to be a valuator who's going to say it's 100 rand, and when the value is going to be 1,000 rand. So it's a problematic tax. My personal thoughts is that it's too complex and too challengeable to actually bring into play.
And also, it's quite painful.
And also painful.
Yeah. 'Cause can you imagine, like 5 years from now, everything that I own is just I need to pay tax on it.
What the question I asked is if I got a share and it goes up and it rockets up to R1 million, and I get taxed on this capital transfer tax, because after 5 years it gets valued and taxed, and then it goes down to R1.
A day later.
Do I get a refund for the taxes? It's got problems.
Yeah. Okay. And what about donations tax? We've also seen that this partial exemption has been removed. Is that something where we can? Is that a tax where we can look for income from?
I think that's a very interesting one, hey? And what interests me even more is the fact when they say subject to a reasonable maintenance exemption. I mean, who's going to determine what's reasonable, and across the board? Or are they going to put a capping in place? So that's going to be quite an interesting tax to manage. And
I also think that, you know what, we're starting to commercialize everything. That's your spouse. You shouldn't be marrying them for wealth. You shouldn't be marrying them to donate assets.
That's not what some of the girls think, though.
He said that, not me. I'm just saying, we need to come back down and understand. We need to come with the human element as well. I am not marrying you, well, I'm marrying you for you. Whether it's anti-nuptial, out of community, in of community, that's something else we can discuss at a later stage. But SARS is now wanting to make this so trivial and commercial that if I donate something to you, then there should be tax on it. Which basically means if I were to buy you a gift, it's technically a donation. I should be paying donation tax. Now, apart from the admin nightmare of calculating that out, I think we need to come back and say, we humans, and that it's not a transaction when we get married. For some, maybe, but
it's a really tricky part of tax, because at the moment there is a provision in the donation tax section under exemptions, which has got a maintenance component to it. And I remember one person coming to me and said, "Look, I send my kids to university. Is that I'm paying for the university tuition? Is there a donation?" And you say, "Well, no, that's maintenance. It's what you need to do as a father. You send them to university." So, well, what happens if I send them to Harvard and it costs now a couple million? Is that now a donation? I could send them to UKZN, but I've decided to send them to Harvard. This is the problem. Is when does it become a donation? When I was at varsity, my parents gave me an Austin Apache motor car. It's the uncoolest car ever invented. Terrible thing. But it cost $1,000. That wasn't a donation. I think that was a pain. I didn't have a girlfriend for the whole period of varsity. But if I had given a sports car, is it different? And I think that's the problem that we have with this type of legislation.
And I think the rationale is to avoid tax schemes, because it's, with the donations tax in place, or not in place between spouses at the moment, it's, a case of shifting, to the lower income tax bracket. And that's where you find that can be a tax scheme, which I think SARS is definitely trying to eliminate.
And then finally, we've got these hidden taxes, and really you can comment on whatever we've spoken today. But these hidden taxes, like the carbon tax, which gets hidden into the amount of your car. We've got these sugar taxes. We've got sin taxes that are hidden into your cigarettes and your alcohol. and at the pump, we've got pump taxes for petrol. Maybe increasing those taxes, is that not an option for the
to generate revenue. I think that if you look at the sugar tax and if you look at the carbon tax and sin taxes, the objective is actually to decrease certain things, like sugar tax, for instance. They're looking at obesity and diabetes. So the decrease in consumption will help to address those kind of problems. Carbon emissions, sin taxes, the objective is different. With fuel taxes, and I'm not sure if you agree, but the fuel taxes is an income or revenue generator. So yes, it has a different objective to the others. But fuel levies, as you know, or fuel, has been proposed to be standard rated from 2018 going forward onwards. So that's definitely going to increase your spend and hurt the pocket a lot more.
When I look at this, it gets quite depressing if you start adding up the taxes we pay. So if I look at the personal income tax, you earn an amount of money, you're going to be taxed at the maximum rate of 45%. You then go and spend the money, so you get taxed on VAT of 14%. You buy a plastic bag, you get taxed. You drive on the road, you get tolled, and you pay tax on your levy. I think as a university, what you should be doing is let's work out what taxes we actually pay, because I suspect that we're paying a lot more than we actually think we are if we added it all up. If we looked at our individual tax rate, it's not 45%, so we're paying probably closer to 60%. And it makes working a lot less fun when you get 100 rand and you actually give away 60. That doesn't have as much fun as actually earning the whole thing. So it's a my thoughts on these other taxes, and I would be happy with them as long as the money is getting spent in the areas that they actually are addressing. So if you're looking at sugar taxes, fine, it puts up the price, but the money you collect, maybe you should actually be having educational programs to get people to consume less sugar. That's the ultimate gain. It's not a revenue issue. When they were bringing out, looking at carbon taxes, the biggest pushback by the tax practitioner community was largely on the fact that the taxes collected would be pooled into the common pool. They wouldn't be used to address environmental issues. So they looked at it and said, well, they're not actually collecting the money to make any difference. Sasol's still going to be pumping out huge amounts of pollution. Eskom is still going to be pumping out huge amounts of pollution. What they're doing is just trying to collect money under the guise of something else. So it's almost, it's a very sneaky way of getting taxes, because you tax various consumptions and you collect the money. As long as they do something in that regard, I'm happy. But if it all gets pulled in and they just basically are collecting money from other sources, I've got a problem with it.
I think the last point, just to wrap up, I know we're running ahead of time. The other taxes, sin taxes for argument's sake, increases every year. Consumption doubles. So as a person who doesn't smoke and drink, I'd like to thank all the guys who smoke and drink. It's your contribution which makes sure that I don't have to pay so much of tax. But coming back to sugar taxes, we need to look at, yes, it will generate revenue, and one of the points that government did make out was trying to build a health-conscious society, and hopefully by increasing it, it'll get people to stop drinking or smoking or consuming sugar drinks. But we have to look at again of the psyche of a country like South Africa, where unfortunately we have this habit of, we're affected with something, there's an increase in the price of Coke for argument's sake, and I'm going to feel that pinch now, but it doesn't stop me from drinking Coke. So in terms of revenue generation, brilliant idea for SARS, because it's something that we know will be generated, but it comes back down to the crux of, you have all of that revenue, you need to provide proper service delivery with that revenue generated.
Okay. Thanks, guys, for your participation. That's the end of our discussion. In order to close, we're just going to have Dr. Suren, who's going to give us a vote of thanks.
Good day, everyone, and thanks to all the panelists for coming along. Thanks, Brian, for your useful insights. I see Brian every 3 months or so at council. Thanks for coming along. I think the discussions that we had today were very insightful and very thought-provoking. One of the objectives of these discussion forums that we're having at UKZN every 3 months or 4 months is basically for students to develop their critical thinking around a discipline. And I think the insights that we've got today would have inspired us, hopefully, and motivated us to deeper study analytically of the material that we do study. So I hope it motivated all of us. I think it led to some deeper insights for all of us. So in terms of thanking everybody, I'd like to thank the panelists, Tax, Deloitte and Morar for coming along and spending their valuable time. Time is money, so we really do thank them and give them a round of applause. To our marvelous interviewer, I think you did a good job, Yoshin Chetty. You can give him a round of applause as well. Thank you, Yoshin. And a special round of applause for Mr. Ghulam Ghani, who's done a lot in organizing this event. Thank you, Ghulam, for your great effort. And I think lastly, the students, thank you for coming along and making this a success. We thought with 5 students initially that we were not going to have any more people, but luckily some people turned out, and it turned out well. My last comment is to get the gifts given out to our panelists. We have Ms. Shazia Issa who will present the gifts. Thank you, Shazia. And thank you all of you for coming again. Have a safe journey home.